So 2020 has just been a weird year overall, and even weirder if you're graduating into this market and trying to make your way in the real estate industry or really any other career path in general. I graduated from college in 2011 when things were finally starting to recover and look up after a few rough years in the economy, but things might have been different if I had graduated just a few years earlier into the depths of that recession. And with all this weirdness happening in the economy this year, it's gotten me thinking a lot about what I would do if I were starting over today in this environment, knowing what I know now, being almost 10 years into my career. Even just 9 years ago in 2011, the world was a very different place. LinkedIn was just taking off as a platform, prop tech wasn't really even a thing, and real estate was much less institutionalized than it is today. And because of that, the path that I took at that point probably wouldn't be the right path for me today if I were graduating in 2020. So what I wanted to do in this video is break down what I would do if I were starting from scratch today in this economic environment in 2020. So if you're watching this video and you're just graduating from college or just starting out your career, or in the first few years of your career in the industry and not quite sure what the next right move is, this video is for you. Hey, this is Justin from breakintocre.com, and if you're new here, on this channel we talk about real estate investing careers and real estate investment analysis. So if you're looking to break into the industry or advance your current real estate investing career, make sure to subscribe to the channel and hit the notification bell so you don't miss any new videos as soon as they're released. So let's rewind all the way back to the beginning, assuming I have no real estate experience and want to decide where to start out first. Before making any big decisions, the first thing above everything else is I'd make sure to start with the end in mind and think about where I wanted to end up in my career path overall. And for me specifically, this was always related to something entrepreneurial or doing my own thing. And in a real estate sense, the end goal has always been to have direct ownership in deals, whether that's owning and operating properties myself or investing with partners on larger deals. So with that in mind, for any decision I made going forward, I would make sure to keep this goal at the forefront and try to make decisions that would take me on the most direct and efficient route to making that happen. And if you're watching this video and you're just getting started, I'd highly recommend the same thing. Do everything you can to get a rough idea of where you want to end up in the future, regardless of where that is, and you're going to make much better decisions when you have those big career decisions to make. So to really start from scratch here, I'm going to rewind all the way back to graduating high school because this is where the big life-changing decisions really start happening, starting with your decision on college. So if I'm 18 years old and I'm just graduating from high school and I know I want to break into the real estate industry, the first thing that I would do is I would do everything that I could to get into the best public university that I could in an area that I think I would want to live and work in long term. And I would also make sure to avoid going into significant student loan debt to do it. So unlike some other areas of high finance, most real estate related roles don't require incoming analysts to come from target schools, meaning that it's not necessarily a prerequisite to have a 4-year degree from an Ivy League university to make the cut at most shops. And because of this, public universities and state schools can be great options to keep your costs down and get a high quality education. And if you're able to work during school through internships or part-time jobs, that makes things even better. I would also take this time to really concentrate on building a network and connecting with industry professionals in my market, primarily focusing on learning about the industry as a whole since I'm brand new to real estate in general. This would involve a lot of informational interviews, either through lunches, coffee meetings, or even phone calls, just asking people to tell me about what they do on a day-to-day basis and how they got to where they are today. So yes, academics are important to an extent, but the most valuable parts of the college experience are the people you meet and the degree itself, so focusing on making sure I'm getting respectable grades while also utilizing every university resource I can to get out into the industry and into the market is going to be the best use of my time and money at this stage of the game. Now, a lot of people ask me if they should skip this part, coming from the opinion that college is irrelevant or not as important as it used to be. And while there is definitely truth to that for some industries right now, real estate hasn't quite gotten there yet, and a 4-year degree is generally going to be a prerequisite for an analyst or associate role at most institutional level shops on the principal, brokerage, or lending sides of the industry. So even though it's very possible to learn all of the things that you need to know to be successful in the industry without a bachelor's degree, I'd still recommend going this path if you can swing it. Now from there, once I've graduated college, the next thing that I would do is try to work my way into an analyst role in investment sales for one of the top major global brokerage firms like CBRE, JLL, Cushman & Wakefield, or East Still Secured in a major market. Analysts at these shops tend to see a ton of transaction volume, especially in big cities. They get to interact with a lot of high-profile clients who are active in the market, and they learn the business in a very structured way with income upside in the process. As I've said on this channel before, it's very common for base salaries to be significantly lower on the brokerage side than the principal side when you're first starting out. But if you work hard and you're on a high-performing team in a major market, it's not uncommon to see people only 3 to 4 years into their career making multiple six figures at some of these brokerage shops, even at the analyst level. These types of roles will also expose you to the big players in the market and will essentially give you a free tryout for principal side roles if you show well on deals you work on for clients that might one day be hiring and might think of you for filling that position. Real estate investment and private equity firms know the kind of training and deal volume analysts and associates in brokerage at the major shops get to work on, and this makes the transition to the principal side much easier and will often allow people to make that transition at a high level right away, coming in at a manager or director level just 3 to 4 years into their career. And this leads me to my next step, which is once I felt comfortable with what I've learned in brokerage, I would work to leverage my experience and the relationships I've built in my previous role to make the transition to a high transaction volume shop on the principal side, specifically on an acquisitions team. Now, in my experience, the most valuable roles in the industry at this point in someone's career are going to be at the smaller, more entrepreneurial firms where everyone in the company is tackling a little bit of everything from acquisitions to asset management and even investor relations. If you move to a firm that's too big, you might end up being very siloed and only doing one thing, which can tend to lead to serious gaps in your skill set when you go out and try to pursue a more entrepreneurial opportunity. In this role, I would also make sure that I would be working on the specific types of deals I would want to personally invest in, both in product type and risk level. So if you end up working on land acquisitions for ground up office development deals, but you want to end up putting your money in stabilized or value add multifamily deals, what you're going to be learning on the job, while it is helpful in the grand scheme of things, is not going to be directly applicable to what you'll need to know to be successful in the apartment space. Now, during my time at this company, I would also work to build as many relevant broker, lender, and third-party relationships as I could, and I would really try to internalize the thought process behind investment decisions that the company is making, especially among senior leadership. It's really easy to be aggressive when you're young and you haven't experienced a major down cycle, but top execs in the industry have usually gone through 3 to 4 economic recessions at this point in their career, and they're going to have a really unique and helpful perspective that you can use to help you analyze deals in the future. And finally, in this specific company, I'd also use my time here to build a track record. So whether that's the total closed transaction volume that you've worked on, the deals you've acquired that have exceeded pro forma returns, or maybe a mixture of both, now is the time to really build a track record and build trust for the future when you're starting to raise capital to do deals on your own. Now at this point, with quite a bit of experience and quite a few relationships, I would have a lot of optionality with where I wanted to go next. So if I wanted to strike out on my own and start my own shop, I'd have the skill sets and the relationships to be able to do that. And if I wanted to join a smaller company as a principal and start to get in on deals and promoted interest, I'd have everything I'd need to make that happen too. At this point, it really comes down to personal preference and how your experience throughout your career has modified your goals from when you first started on this path. Now, with all of that said, one thing that I would do throughout all of this as soon as possible is to start investing in real estate, regardless of how small scale that investing is. Every seasoned real estate investor I've talked to has told me the same thing. They wish they bought more real estate and they wish they bought it sooner. And even just a decade into my own career, I already feel that too. As you're learning and you have a salary to fall back on, get some wins under your belt and start to take the training wheels off by actually putting your own chips on the table and getting in the game. And whether that's through direct ownership in smaller properties or LP investing in bigger deals, getting the ball rolling is the hardest part. But once you have a process and a team in place, things start getting much, much easier from there. Also, by actually getting out there and investing your own money in deals, you'll be able to realize if you like being a real estate entrepreneur and want to be on the front lines, or you'd rather partner with someone else who's going to handle the operational component. So just because you believe in real estate as an investment vehicle doesn't mean you need to be raising equity to do your own deals. And by experiencing what that's like on a smaller scale first, you can make a much more well-informed decision on the investing path you want to take before you've gone out and raised millions of dollars of equity to buy a deal, only to find out that you don't want to be an operator in the first place. So if you're just getting started, whatever your goals may be, to sum up, there are really 3 things I'd do if I was just starting out today. First, I would make sure to begin with the end in mind, making decisions based on where I wanted to end up as a real estate professional and where I wanted to be in the future. From there, I would do everything necessary to make sure I had all of the prerequisites and had checked all the boxes to do the things that I wanted to do, whether that's through a formal university degree or through working for a brand name employer before striking out on my own. And finally, outside of the first 2 points on this list, I would also start investing as early as I could, no matter how small the investment might be. This would start my equity compounding clock, and I would get valuable investing experience very early on that could help guide me around career choices in the future that are going to be best for me based on my personality and my interests going forward. So overall, if you do these 3 things, you're going to have a much easier time getting to the place you want to go in the real estate industry, regardless of what that end goal might be. And if you are finding yourself in the beginning of this process, trying to get your foot in the door and trying to land a job to build some experience and a track record, and you want some help in the process of doing that, as always, make sure to check out Break Into CRE Academy, which is going to give you instant access to 19 real estate financial modeling and analysis courses, practice Excel interview exams and worksheets, and additional one-on-one email support from me directly to help navigate that next step in your career. So I hope this was helpful in choosing the right next step for you. If you're watching this video and you've been in the industry for a while, let me and other people watching know in the comments if you have any other pieces of advice that you would give to someone just starting out in the industry today. And if you like this video and want to see more content like this on career-related advice, make sure to let me know by hitting the like button and also subscribe to the channel so you don't miss any new videos as soon as they're released. So thanks so much for watching. Good luck with your next step in your career, whatever that may be, and I'll see you in the next video.